Hello and welcome to the Fund Accountant episode, your go to source for the latest insight into the world of finance and accounting. I am the host, Ankit, and today we have a fantastic episode lined up for you. We are driving deep into the world of fund accounting as essential function in the investment management that keep the financial head of fund in check. Joining us today, our guest is Shivraj, a seasoned professional with an extensive experience in fund accounting. They work with a various type of fund, including mutual fund, hedge fund, private equity, real estate as well. We are excited to learn about more on the critical role of fund accounting play in the financial world. Welcome to the show, Shivraj.
Hey, hi. Thank you for inviting me. Yeah, let's see how it goes.
Yeah, Shivraj. So we'll go with a one by one question that we came across with our audience as well. Uh,
Okay, one quick question. Is it something like a mock interview that you're taking my interview and I would be like interviewee or is it?
yes, because some questions that we find out with our institute, with our company, with our organization that people are facing the issues, the common question, but hopefully you answer in the short and layman word. So we'll start with our questions. Can I?
Yeah, please go ahead. I'm happy to answer, man. I'll give it a try. Yeah.
What type of funds have you worked with uh, on?
Oh, well, see,
In a fund business, you would see lots of different structures like master feeder, standalone, parallel, complex structures and all, right? I have worked with all of these structures, but apart from that, if you ask me like what are the different funds that I have worked on, I have worked on even mutual fund, hedge fund, private equity fund, SPVs and all right. So from that accounting or operation perspective, I would say you would say different structures, and from a legal perspective you would say different structures, because private equity is your partnership structure. Hedge fund and mutual fund, they are like pool structure where the investors contribute funds, right? And hedge fund and mutual fund, they allocate units. Private equity align partnership interest to each partners. So I have worked with all of these funds. Yeah.
Thank you, Shivraj, for giving the. Thank you, Shivraj, for giving this such a nice answer on this part. We have a second question for you. Uh, what are the key components of a fund and financial statement?
See, key component of a fund, I would say your trial balance, which is essential because trial balance provide you detailed insight of funds financials, and it also helps to prepare final balance sheets and income statement or statement of profit and loss, I would say. And these are the basically very key or essential statements which comes under financial package. Along with that, if I talk about private equity prepares PCAP package. PCAP, it means partners capital book for all investors, right? And if I talk about hedge fund and mutual funds, they basically prepare cap stock activity and even NAV statement for each investor and each series or class if they have any, and publish that on regulator side. If I talk about mutual fund, it is mandated to publish NAV on regulator side. Like if I talk about India, we have AMP, and same if I talk about US or other countries, all countries they have the regulatory bodies where we publish the NAV on their sites. If I talk about hedge fund, again it is mandated to publish NAV of hedge funds to the regulatory sites as well. So yeah, that's all. I mean, these are the main reports which you can see which we prepare. But along with that, see if we want to produce any other reports like statement of assets or performance reports, performance attribute, Then performance indicator reports like IRR, multiple of the assets and all. So you can prepare, right? Even you can prepare fund flow statement as well. But uh, from the financial reporting or financial statement perspective, if you ask me what are the components that you would see in the balance sheets, your capital, of course, which we record. Then under capital, of course, contribution or unfunded funded part, and apart from that, even distribution also that we record. Then realize and realize, that portion also we record basically. Then you can see the assets as well, which assets like investments, prepaid expense, all that items which we record. And then your liabilities, whatever payable and outstanding, the expenses which you have, or excess amount if you have received, that all you can report it as a liability. That's how basically which we see the components, or even the important statements of funds, and even that we prepare on monthly and quarterly basis. Hope that's help you to
Yes,
get
Shivraj.
this.
You have explained each fund what is the important part we should take consideration when doing the fund accounting part. So, however, this will be noted with our audience as well. So, we moving to the third question now. It is, how do you calculate the net asset value for the fund?
See, in theoretical way, if you ask me, the formula of an NAV calculation is like total assets minus total liabilities, right? Divide with total number of outstanding units, right? But in hedge fund, I would say after the calculation of, or pricings of securities, or recording of transactions like prepaid or accrued in the books of fund, and also reconciling the statement, or transactions and all, we basically produce NAV. NAV, it means net assets value of a fund. And then we also calculate management fees, we adjust that in total assets. And then if the fund has, let's say, performed very well, then we also calculate incentive fees to calculate the net assets value of a fund. Right? This is how basically NAV we calculate in hedge fund. In a private equity, we calculate total assets, but you would see different terminologies like carry and management fees that we basically charge to the funds, and then after we calculate the NAV of the fund, net assets value of the fund. All right.
Thank you, Shivraj, for giving us such a wonderful answer for net asset value. We are moving to the fourth question. The 4th question is, can you explain the difference between accrual accounting and cash accounting?
See, cash accounting, it means net basis accounting. When we say net basis, it means, let's say, fund has received capital call, then only you can record it. Let's say fund has paid admin fees, then only you can record it. So that become your cash based accounting. Cash basis, it means whenever fund transact anything in a cash, that comes under your cash based or net based accounting approach. If I talk about accrual base, let's say we have the fees which is outstanding, right? Incentive fees, sorry, not incentive fees, management fees which is outstanding, or let's say admin fees or legal fees which is outstanding. When we say outstanding, it means yet to pay, right? So that yet to pay wala portion comes under your accrual based accounting. So accrual is basically if it is pending to pay or pending to receive anything in the books of fund, right, within that particular accounting period, that we treat as a accrual portion. For example, let's say dividend which has been announced but yet to receive, that we treat as accrual.
Correct.
And we record it in the books of account.
Correct.
Interest payment, let's say accrued, right, we have earned it but yet to settle in the bank account, so again that comes under accrued, we record it. But in case of cash accounting, we don't record anything until we receive that portion.
Yeah, Shivraj, giving the example of dividend and interest, it really helpful to the audience to bifurcate the accrual and cash accounting. So moving to the fifth question, how do you account for distribution and allocation in the fund?
See, distribution is basically, returning the invested value plus gain or income, right, back to the investor, right? If you ask me how we categorize the, first we'll have to categorize the distribution, right? When we initiate the distribution, first of all we should check the whether amount of, the cash which is available in the fund or not to initiate distribution. Second thing, we check which portion that we are, distributing back to the investor. Is it a capital, is it a part of gain, income, dividend, or any, carry fee, what it is exactly, right? On the basis of that we initiate the distribution. And then after, in terms of allocation, capital gain, income, that we definitely, after the distribution we allocate to the LPGP accounts. And if it is a carry fees, again we split and book the in the books of LP and GP both. That's how we basically, allocate it.
Thank you, Shivraj, for giving all the answer very in the brief and short way. Uh, and just want to close the session for the day. Thank you again, Shivraj, for joining us today, and our listener as well. Thank you for tuning on. If you enjoy this episode, don't forget to subscribe, rate, and share this with other who might be find helpful. Stay tuned for the next episode where we will deeper dive into the financial world. Until the next, thank you so much once again.
All right. Thank you for inviting me. Thank you. Thank you very much. Yep.